morning, everybody. Good afternoon, depending on where you're viewing us from. Thank you for taking the time to come and attend the Seismic webinar here. I think you're in for a treat to learn about a terrific new venture capital company that is operating out of Los Angeles. The three principals here, Eric, Alice, and Stephen, have very, very strong experience and success in business individually, and now collectively they're a real powerhouse. We've all heard of venture capital, but they have organized a different operational format that I'm anxious for you to hear. And again, we thank you. The webinar will be open to Q&A at the end, and feel free to ask away with any questions or comments you may have. And without further ado, we will turn it over to the three principals here of Seismic, and thank you.
Thank you, Bob. Good morning, everybody. Good afternoon. I'm Stephen Weinstein. I'm the CEO of Seismic Capital. My partners, Alice Newhouser and Eric White, are on the webinar with us today. We're excited to tell you about what we're doing and how we're doing it. And just to lead off with a tempting bit of information, one of the things that we're trying to do for our investors and obviously for ourselves is create return. And when we look at returns of various asset classes, whether it be bonds or stocks or commodities or venture capital, private equity, the one that creates the really greatest return over the years and for primarily institutional investors and high net worth individuals is venture capital. Recent returns reported by PitchBook are 67% IRR year on year. And, I'm not saying up close or right now that we're going to create that 67% return, but even if we get close to that by picking one or two, good companies or more, and monetizing them and creating some value inside of them, we'll obviously have done very well for the folks who join up with us. So that's our interest for today, to tell you what we're doing, answer all of your questions, and make sure that if you're considering an investment with us, that you're comfortable and that you'd like to move ahead. So we'll take as many Q&As at the end as anybody has. Please put them in the Q&A section, and we'll answer them all after we get to the end of the program. I'd like to turn it over now to Eric. I should say I'm going to act sort of as moderator and biased critic all the way through. I'm going to turn it over to Eric, who's going to talk about why we started Seismic and how we got to where we are.
Well, thank you, Stephen, and thank you, Bob, and the people from Tango for putting this webinar together. I think we have an interesting program here to speak about. Listen, I've been deeply involved in private equity, venture capital as an investment banker, investor, ran a tech company, have a deep long-term relationship in government relations as well. And Stephen and I have met maybe 15, 16 years ago, worked on numerous projects together in private equity, real estate, venture capital. And about 3 years ago, plus we started looking at some of these great tech companies as an investment banker and realized that maybe it was a little bit better maybe to start a group. So along with Alice, we started, Seismic. And we think we're different than other venture capital-like companies that are out there that are seeking capital. Listen, we look at technology, we look at med tech, we look at all these different categories, and I think what makes this different is that we look at a slate of deals. So when you invest in Seismic, you're not investing in one-off companies like you may do at Sweater or Start Engine. You're investing in a slate of companies. We've seen hundreds and hundreds of companies along the way. We think we're putting together a great slate. We have a couple of deals that we're going to be announcing, And I just think we're different. And I think that you'll see throughout this webinar why we're different, why your investment is different, and why it's worth investing with us.
Yeah, and Eric, maybe it's worth saying that, when we started, when Seismic started to take some form, we were seeing lots of little deals that we really liked. And we decided early on that we couldn't chase just one of them, that wouldn't be prudent. And how would we put together a format that would let us and people who want to invest with us have diversification? And since we couldn't put millions of dollars ourselves into one company or another company, or certainly not 10 or 15, we decided we would start Seismic because we were seeing companies that we really loved. And some of them are going to be our initial companies when we announce our first.
And one another thing that differentiates ourselves, Stephen, and people are on this webinar is that, venture capital, we'll be controlling these companies. So when you're investing with us, we wind up through our holding company structure, which we can get into at some level. We wind up controlling the board of directors. We wind up in control of the entrepreneurs. Not to say that we want to run them on a day-to-day operations. They know how to sell. They know their products. But the fact is that with investing with us in slated companies and having a sense of control over these companies, we think your investment is in good hands.
All right, maybe we'll let Alice get a word in edgewise now.
Yeah, I just sort of following along on some of those same themes. When we were first looking to build the company, and we didn't quite know what would be an appropriate structure for that. We knew we did not want to be a fund because there were limitations on how many people you could have and the kind of capital that they would need to invest. And we really wanted to make it more broadly available for people who generally have not had access to venture capital. And so we ended up coming up with the structure that we did, which is the holding company structure. So think Warren Buffett and Berkshire Hathaway, but on a much smaller scale to start with, where we identify companies that we really like. And so we acquire them just as they did with Berkshire Hathaway. And we're not looking to replace management or change focus. We like the company because we like the company and the people who are the founders, but we want to be there to support them. And so we've taken a patient capital approach so that people have time to build their companies and to start to really generate the strong revenue that we all believe that they can, and allow them to focus on doing that. So we pick up a lot of the responsibility for overseeing the back end, the support systems, the accounting and HR, and going through the audit procedures and a lot of the legal, so that they can do what they're supposed to do, which is to run their core business. And in doing so, we are really giving them the chance to build the company that they wanted to, and we're not inhibiting the benefit that they should be getting at the end of the day. So notwithstanding the fact that we are owning and controlling the company, at the end of the day, we have structured it so that they would derive the same benefit on whatever liquidity event they might have for the company that they would have had if we had just been an investor instead of controlling the company.
Yeah, that control thing is sometimes can be a little daunting until the entrepreneurs understand that we're really providing backup, and we're really more the kind of people that ask questions like, did you think about, what about, how about if you, rather than shaking a finger at somebody and saying you must do that, which is candidly the experience that they get from a lot of venture capital. And having been someone who's run a venture capital backed company, I can tell you it is not a nice way to spend your day. So let's move on, and let's talk a little bit about how about what we're looking for. So at the end of the day, we're really looking for companies that can shake up their space. That's what Seismic is all about. We want them to either shake up the market that they're in or create a new market. We took a look early on, when even before we started the company, and we asked some former Lehman Brothers analysts to look at where early stage companies go wrong. And we looked at over 40,000 companies. And what we found was that two things get in their way. One is running out of money. Obviously, if we're backing them, they're not going to run out of money. So we fixed that problem by joining up with the company in the first place. The second place that they run into trouble is that they get trapped in the business of running the business rather than the business of building the business. So that's why we've structured our investments so that we're taking, like Alice said, over all of those back office admin, kind of things that really can distract from the mission of building the products and acquiring some customers. So when we find those companies and we sit down and we work with them, they understand that we're going to be in that control position, but there are really certain things where they have a deciding vote on such matters as bringing on new key employees, material joint ventures, sale of the company, taking the company public, things like that. And those kinds of things are are less restrictive than what they would get in a typical venture capital scenario. And we think that's going to lead to success as we move along. So Eric, you want to talk about some of the companies we're excited about right now?
Absolutely. So, listen, we've looked at, I think, 300 companies or so along the way. We have a tremendous diligence team behind us. Some of the companies that we've looked at that we're excited about is, let's take a look at Game Cloud Network. They provide infrastructure for the gaming industry, which is obviously, it's a booming industry. Everyone's playing games, even adults and millennials and Gen X's and all these, everyone's playing games. So what excites us about them is their management team. The CEO ran EA for Asia. He's put together great teams traditionally, but also their clients have included Microsoft, Google, AT&T. So this is a startup-ish company. Their revenues in the hundreds of thousands of dollars per month, but they already have some of the major players in big tech. With a great management team, we're very excited about them. Other companies we're involved with, a company called Moviecom, which is a company out of the East Coast. They provide movie clips for motivational purposes, but also for social media. So if you want to talk, if you're speaking with someone and you're not communicating well, you can put in, you can't handle the truth. So that's the types of things that they're doing. Another company that's really exciting to us is a company that's going to be doing environmental ratings for companies, municipalities, and so forth. So if you've been following the SEC, you'd realize that the SEC is going to demand that every company in their SEC reports need to put in the economic hurts and benefits of an ESG program that they have within the company. Well, they're looking to become the standard bearer of that. Obviously, I have a background in government relations, and we can talk a little bit later about some of our advisors that are helping us. But to be that standard bearer for all companies on ratings for their company, that's something special. In fact, this morning, I was looking at that company, and I was looking at the Dun & Bradstreet report. And in Dun & Bradstreet, they have an environmental rating that they're going to need as well. So these are the types of companies that we're looking at. We also have a 3D printing company that's actually out of our area in Los Angeles that have this amazing equipment to provide these little pieces of metal to be put on all types of different devices and shavers and all these other things. So these are the, we also, again, there's a company called Block Bonds and Spare. Those are two companies that are in the fintech space that help the unbanked become part of the banking system. So many people are not part of the banking system. They're allowing them to go to a grocery store or bodega, 7-Eleven or whatever, and pick up cash instead of an ATM machine. So again, bringing people into the economy. They're doing that both in Spare is doing it here in the US. Block Bonds is doing it in Asia and in Africa. So these are some of the companies we're looking at. And again, we continue to look at them. We have a great diligence team behind us that is making sure that if we fall in love with them, that's nice, but we need to do a little bit more detail work on that, and we do that.
Okay, let's see. So we're at a point in the world where we can create this opportunity. In the old days, if you had 100 investors, it took about one person to keep track of them all and manage the communications. There's the ability now through technology to manage hundreds or even thousands or millions of investors with just the push of a button. That includes keeping track of their investments and also communicating with them through email or through other means. The SEC also invented a streamlined process for bringing products to market. This worked to our advantage because we registered under Regulation A and qualified with the SEC to have this offer that we have open now. It's also going to be useful as we take our companies forward, and we don't have to recreate the sausage machine. We can just put our companies, take them out, raise capital for them through Regulation A or through a typical IPO going down the road. So we have we've launched our offering. We worked very hard to make it so that we could take accredited and non-accredited investors. We have a goal of having a typical investor coming in at around $50,000, but we can go as low as $1,000. We have incentives that we'll talk about a little bit later for the larger investors at $50,000 and above. I don't need to dwell on this too much longer. Where do we go from here? I'll talk about structure. I'm sorry, I need Alice to talk about this page.
It doesn't matter. And part of this, we've already really touched on, but it has again to do with how we were trying to really marry the Wall Street and Main Street, right? So how could we give people the understanding and the clarity that you get from actually being under some level of regulation with the government, so that you're actually on Wall Street, but how we can have access for people who traditionally don't have access to these things. And so as Stephen had touched on, with the creation of a new section that was now became more viable with the new regulations that were implemented, we could actually raise money with both accredited and non-accredited investors, so that everybody actually has an opportunity to come in early stage to companies that they otherwise wouldn't. So many times I think everybody has seen what happens if you want to be part of an IPO, but other people are getting the benefit pre-IPO. And so all you're doing is hoping that, whatever you've acquired in terms of stock is going to get additional benefit going forward, whereas other people are taking money off the table, and you feel a little bit left behind. Simultaneously, you can get too early stage investment, and that's where some people can actually find that they have some level of access, but unfortunately, the success that goes along with that is not as likely. As Stephen was mentioning about the commission that the study that we had commissioned, just finding that really early stage is very, very difficult to find success. So we think we found a really nice sweet spot that works for all different kinds of investors. And simultaneously, it works really nicely for our founders who have been looking for people who don't just have money, but also have levels of support, not just what we provide back office, but we have a really extensive advisory board. And we were very specific about the areas of knowledge and experience that those people were going to be able to bring to our companies. And so we were really looking for something that was a classic win-win-win, so that the founders could have a good investment group behind them, and investors have a nice opportunity. And we have the joy of bringing it all together and finding and supporting really neat companies, while also giving investors an opportunity they might never have had before.
Okay, we've touched on this before. We are a holding company, we're not a fund. That means that we can welcome investors of all stripes and at all income levels. Because we're a holding company, as I said, we're able to take investments from accredited and non-accredited investors. Typically, if you want to invest in a venture capital fund and you want to chase those 27, 67, whatever 7% returns, might result, you have to pony up $250,000, $500,000, $1 million to be part of the club or more. And
not that we wouldn't take that, by the way.
yeah,
we would take that. We would.
And typically, when you invest in one of those, you're subject to capital calls. The venture capital firm may call and say, "Hey, we need another $250,000 from you next week." Once you invest in Seismic, you're in. You could sell your shares if you want to. You can invest more if you want to, but we don't get the chance to come and say we're dipping into your pockets again. But we've talked about the minimum investment. Some geeky stuff, we're not subject to the 40 Act because we are a holding company. Happy to talk about that in more detail, but it's, as I said, just geeky stuff. Eric, you want to take it from here?
Well, we'll talk a little bit about our advisory board and our group. Actually, Stephen, why don't you just give a little bit about your background? Just a slight little bio would be nice.
Yeah, maybe just before I change the page, you want to talk about our investment strategy, and then Alice could talk about diversification, just to hit those couple.
Well, our investment strategy, again, I mentioned earlier, we look at these pretty well Series A, pre-Series A companies. The company needs to have revenue, needs to have a product. Again, we do a diligence, a deep dive into valuation. We look at many, again, we look at many different industries. We're not really in any particular industry. It could be med tech, it could be gaming, obviously, it can be environmental and impact. It can be, again, fintech, as I mentioned. Again, we look at, a diverse group of companies. I've looked at aviation companies. We're looking at 3D printing companies. So yes, basically technology, but mostly what we would call as a seismic move, and the company that could have large growth and fit within our structure of our control of the board and so forth. And also, again, we need to get along with these folks and they need to get along with us. And that's very important with how we do some of our investments.
Alice, you want to talk about diversification?
I would love to.
Favorite topic.
It's one of the really neat features of what we're doing. People may be familiar with crowdfunding and similar kinds of startup financing, but those all are dealing on a one-off basis. So you're taking an all or nothing approach with one single company. And what we are providing is a diversified portfolio of companies with, classic investor advice is to be diversified. And so that really allows people to hopefully enjoy the upside of, the best of what we find, and not have missed out on that one thing because you're only able to invest in one or two companies on your own. Part of that requires us to do some, as Eric had mentioned, some pretty extensive due diligence. And they are the cornerstones of how we will ultimately invest in a company. And as Eric mentioned, we do it on a third-party basis so that no matter how much we might fall in love with a company, we know that we are getting independent advice in terms of structure and technology, as well as doing personnel checks so that we don't end up with the kinds of people running our companies who we actually would not want to be in business with. So we're really pleased about being able to make this an opportunity for people to have that broader approach to investing. We're looking for anywhere from 10 to 14 companies at any given time. And that leaves a lot of room for upside for people.
Okay, everybody, time to put on those propeller hats and let's talk. Let's get into the weeds on some tax details. Seismic is a qualified small business. That means that when you buy your shares directly from us, until the point that our net asset value is above $50 million, you are issued qualified small business stock. This means that if you hold your shares for 5 years or more, which you don't have to do, but if you hold them for 5 years and then sell them, you don't have to pay capital gains taxes. Obviously, you should check with your tax advisor on this because we don't offer tax advice. But the underlying message on qualified small business stock is no capital gains taxes after a 5-year hold period. This means that if Seismic delivers results in comparison to another firm which doesn't have qualified small business stock, and you sell their shares or our shares, you'll walk away with more capital at the end of the day by holding our shares than by holding theirs. It's an important consideration. We think that at the end of the day, you may never want to sell your Seismic shares because our intention is, which we haven't touched on yet, is to provide dividends as we go through when we can, and also distributions from when we monetize one of our companies. So one of the questions that I've already seen come in the Q&As is, how do I make money with Seismic? And the answer is, number one, when we can make distributions, we can. That will come either from cash, the company's cash flowing, or from us selling them or selling parts of them. Number two, when we can just do dividends, we'll do those, and that would come from strong operations of the company. And number three, if we've done our job right and the stock price goes up and you sell your shares at sometime down the road, you can create a gain there. And if you've held them for 5 years, you can not pay capital gains taxes. There are some provisions for if you hold for a shorter period, you can take a partial exclusion on the capital gains taxes, but that's the kind of thing that you would want to talk to your tax advisor about. Happy to answer any questions on qualified small business stock down the road. Hopefully you haven't fallen asleep while I talk.
You know, one thing too, Stephen, is that, again, our competitors out there, and I wish them well, whether it's Start Engine or Sweater, they don't offer the qualified small business stock. Also, if you want to invest in an ETF like ARK Investments with Kathy Wood, she does a great job. They don't offer that as well. They don't offer that either. So, again, we think ourselves as being different. We're out there obviously seeking, your investment, but again, it's different than some of the other investments, and the qualified small business stock is one of our benefits.
Eric, you want to talk about leadership?
Yeah, sure. But why don't you, Stephen, let's get a little bit about your background, and Alice as well, and we can get into some of the rest, but it'd be good to talk about it. Because again, we have a great team here, and it'd be good for you to know, I know Stephen's been speaking, but he's deeply experienced, and so is Alice. So just a little bit about yourself. It'd be great.
Well, a long time ago, I decided I would not go to law school, at least for 2 years, because I just couldn't bear the idea of being around crazy, neurotic people, worrying about what their future looked like. So I became a journalist, and I was fortunate to get a job working for Associated Press, which then led to a job working for Reuters, which then turned into a technology, marketing, and financial job doing mergers and acquisitions. So when I was at Reuters, just as an example, we saw the first instances of Microsoft Windows coming out. And we went to Microsoft and we said, hey, what would you think about opening the COM port on the back of the computer so we could put our real-time data up through Windows? And Microsoft told us that was one of the dumbest ideas they'd ever heard. So we finally convinced them to do it. And now, practically everybody in the financial world has data populating spreadsheets all day long, running all kinds of techniques against them. We also put up the first artificial intelligence applications to massage that data coming through the COM port, through the Microsoft Excel. We also did the first links of news stories that were automatically populated so that when you click on a name or you click on a picture, you get more information. These are all things that have become standard today. We're all so used to them, we don't even think about where did they come from. But I can tell you, as somebody who was there at the beginning of making that happen, it was a really exciting time. And I feel like today, as we're looking at some of the companies that have come across our transom that Eric's been working with as managing our deal team, and our evaluation team, some of them are just as exciting as that. And I think if we look at who we're going to invest in now, we forecast out 10, 15, 20 years, we're going to see these things that we're working on today, which are really new and novel, are going to become standard operating procedure. But that's where the excitement and that's where the opportunity comes about. After I left Reuters, I did a roll-up of messaging companies. That was a leveraged buyout play with two very strong leveraged buyout shops. I worked with them for a long time. I then spun out and turned around a venture capital-backed company that had been received funding 4 months earlier and was already a turnaround. That's the kind of thing that makes you appreciate what good management and what good venture capital can do. We didn't have the management until I got there, or the good venture capital backing until we fixed that. We were able to sell that company for a good return. And then I went into the advisory business and met Eric, and we've been working together on that. We've done a lot of investments. One of them that we did, the most recent one that we did, was just to pass the hat investment to back some patent litigation, produced 144% IRR. We're proud of that. It was a tiny, tiny thing. We just backed a couple of patent cases. We had the advantage of the rocket docket, as they called it in Texas. So we knew that we had an end date when the litigation would be finished. That rocket docket has gone away thanks to pushing by some large companies. We were able to get out before it went away, and we're happy to produce those kind of returns. In terms of Seismic, this has just been a great opportunity so far. We put together a really great team. Everybody has everybody else's back. We've got amazing advisors outside, from our marketing team to our legal team, and Eric will touch on those in a minute. And I think I've yacked on enough about myself, but happy to answer any questions at the end. Eric, over to you.
Want to talk about what about Alice?
Oh, now we can't hear you.
What about Alice?
Oh, I was just going across the page there.
That's okay. Let's go to Alice, and I'll speak about our advisors and so forth, and some of the other people involved.
That sounds fine. We'll kind of be mixing it up, since
Right.
My background is much more on the operational side of things. So, Stephen, 2 years for you with law. For me, it was 5 years to make sure that I was not going to be moving on to become a lawyer. And ultimately found myself in the world of business, which was new for me, and just found that was what really intrigued me, as opposed to doing all sorts of research and writing papers, and then leaving somebody else to make the decisions about how they actually wanted to proceed. So I wanted to be on the decision-making side. I spent a lot of my career in entertainment, doing operations and a lot of film financing. I was with a company called Carolco Pictures, which ultimately filed for bankruptcy. And I was asked to run the company through the bankruptcy and post-bankruptcy, which ended up being, frankly, my best business education around, as it was filled with transactions and I was responsible for everything. And at the same time, it allowed me to start to explore advisory work and other things that were of interest, including ultimately working with a partner. We developed and built the first ground-up movie studio in Los Angeles, since the studios had developed theirs 75 years before, and inadvertently ended up creating two global businesses. One was replicating that model throughout the world in many different communities, but also the support services that became a part of an independent studio like that. And that has been grown into a global business as well. So as a result of my work with the Carolco bankruptcy, I ended up being approached a number of times by lenders who had distressed companies and who brought me in to do workouts or to otherwise manage distressed assets that they had. So I learned a lot about what not to do, which to me is really helpful. And it's part of what I enjoy, is being able to look ahead and anticipate bumps that might come up, so that you can do your best to avoid them, so that those bumps don't become hurdles and bigger barriers. And I continued to do some advisory work, which is how Stephen and I originally met, and identified a great deal of interest in how we could support some early-ish stage technology companies. And he and Eric had started working on the foundations of what has become Seismic. And that's how I got to join up with this great team.
Thanks, that's Alice. Myself, well, again, I was a lobbyist in government relations in Washington, D.C. for years, working in the gaming industry, transportation, telecommunications, worked on the trucking deregulation, the deregulation of the communications industry in the mid to late 90s, represented biggest companies in America and the smallest companies in America. And from there, I started a company called Broadband Networks in San Francisco, which grew from 6 people to 600 people in about a year and a half. Valuations grew from nothing to $300 million. And we were one of the few companies in Silicon Valley during the boom period in the late 90s that actually made money. We would go into an investment banking company and they go like, Jesus, I don't know what to do with you guys. You guys make money. That's very different. But so I bring some of that background and then got involved in investment banking and venture capital, and met Stephen along the way and did a lot of media deals and technology deals and so forth, and seen a lot of companies along the way. I think I bring a good background in investing, private equity, venture capital to this. Also being involved in government relations and investment banking. Work with hundreds of companies, and you need to learn about their companies pretty quickly and get up to speed, which I did in those industries. Also on our team is Jan Duran. He's our chief legal officer. He heads our legal team. As you know, when you're doing deals and so forth, you obviously need lawyers. Jan has deep background in being a senior partner in some major New York law firms. He's run a bankruptcy and trustee practice. He's a trusted friend of ours, and he's a trusted part of our team. And again, you can't, listen, we always talk about like, oh, lawyers, but we need them, and we need good ones, and we have good ones working for us. Other people that are,
you'll see on a later page how many lawyers we have.
We have a lot of lawyers, guys.
Yeah, we got a lot of
lawyers. And so, we also have a lot of advisors, and you can take a look at a few of them. We've got a question from the audience today regarding environmental ratings, and whether it's going to be independent. And the idea is yes, they want to be an SRO, separate regulatory, a separate regulatory organization that can work with the SEC and be independent. And so, how do you do that? Well, it's a challenge. They have their algorithms are first rate, probably way ahead of everybody else's. And then there's a Deanna Dow, who's one of our advisors. She's someone who I've known in the government relations industry. And obviously, you're going to need that when you try to get anything done through the SEC at that level to become an SRO or one of the SROs. So Deanna is a trusted advice to us on government relations, whether it's SEC, whether it's other agencies in Washington, whether we need them. And hopefully we do at some point. There's a fellow named Brad Payton. Brad is someone that I've known for over 20 years. He runs an incubator shop out of Santa Barbara. He's a professor from the University of Santa Barbara. Through that company, he helped build a company called Inogen. Inogen is a publicly traded company, a multi-billion-dollar product. That came through a student group that had ideas, a part of a panel, an idea how to provide portable oxygen equipment. So Brad is part of our team and looking at startups and helping us. We have a fellow named Bruce Waxman, and Bruce is he's a headhunter, so to speak, and he's been very helpful and will be very helpful for us in placing people within these companies, understanding salaries, understanding how leaders work within companies, and he's been extremely helpful with us regarding that. We have a fellow named Demetrio, who's there he is on the next page. And again, you can look at all these bios. There are 11 of these very qualified people. Demetrio is someone who is, very up on technology and web and gaming, and we placed him within GameCloud Network. So he's going to be working for GameCloud Network and with GameCloud Network. He's been extremely helpful to them and extremely helpful to us in understanding that company and going deep in the weeds of that company. So I'm not saying he's part of the diligence team. He's not our spy, so to speak, but we love having Demetrio as part of our team. And you can take a look, at the rest of our group. And again, deeply experienced. They're very involved with us. We meet with them 6 times a year. And the companies we're dealing with reach out to them. We want them to reach out to them after they become part of our portfolio, and even before. And again, you can take a look at some of these deeply experienced people. And we're
And
really
Eric,
lucky
just
to
maybe
have
to
them.
go back to the question about the environmental ratings.
Right.
This is a company that was identified to us by one of our advisors, which is Bob Andrealis, who in the past ran the ratings business at Standard & Poor's. And this company that we're looking at is an independent company. It is in advanced stages with the SEC to provide environmental quantitative ratings as opposed to qualitative ratings against publicly traded and private companies and municipalities. So we're excited about this opportunity. We're in diligence now, so we're not announcing that we're ready to buy it or invest in it. But it is a very exciting prospective opportunity for us. And about these advisors, they're very helpful to us. And so on the face of their involvement, it's very, very helpful for them to look at the companies that we're considering and also look at what we're doing. But we think that the larger value that they will provide is that they're available to all of the portfolio companies. So if one of the portfolio companies, for instance, needs to have a door open, do the advisors own shares? Yes, they do. But if they need a door open or they need to, talk through a strategy point, so forth and so on, they can do that with any of the advisors. They're available and eager to work with the companies. As advertised, I said I would point out our amazing team. You can see we have a lot of lawyers, accountants, people helping us get this offering to market, and our diligence team really is unparalleled, and they make sure we understand the vagaries of all the investments that we're considering. They help us set valuations for the companies going in based on comparables, and they help us look at what are the exit multiples going to be that we can expect, so that we can make an intelligent decision about, should we invest in this one or that one, or should we pass on this one because there's no prospects of being able to sell it, that kind of thing. It makes sure that even when we fall in love with the company, we're being responsible about investing our dollars and yours. Alice, you want to talk about the benefits of being a seismic company? And then I think we should probably try to wrap it pretty quickly because we're at 45 minutes.
Yeah.
I want to get to some of the Q&A that popped up.
Yeah, so the first benefit of being a seismic company is that you get to be with us. So no, this was, it's been hard to sort of articulate in this time frame the many ways that we differ from everybody else who's in some similar way in this space. But I think the structure around which we provide opportunities to our portfolio companies is really unique. So in addition to providing capital, we also looked at how we provide capital. And traditionally, there's benchmarking that goes along with certain amounts of money that would come through from investors. And we didn't like that it meant that that portfolio companies would be focused so much on trying to achieve a certain thing or a certain time frame, when maybe it would make more sense to shift to something else, or that maybe it's going to take longer, but it would be more worthwhile in the long run. And there just needed to be greater flexibility. And so that's what we built into our system, which is instead of looking at sort of created benchmarks, we just look at a 2-year time frame. And every 6 months, we go back in and work with our companies to determine, is this working? Do they need to be modifying? Maybe their revenues are higher and they don't need to take as much money, which means at the liquidity event, they're going to do better. It's really giving people the opportunity to figure out what's the best way to grow the company, but understanding that they're going to have the capital behind them. We had mentioned before about, what we provide in terms of the support so that they don't have to be worrying about the things that are just not going to be generating revenue, right? So we just want them to get customers, improve their product, and broaden their scope. And then, as we've also mentioned about who we have as an opportunity, in addition to what we provide just this remarkable suite of advisors, as well as just that old-fashioned Rolodex. So being able to pick up the phone and talk to people who have experience in myriad areas, and it's because we are regularly involved with the companies, and because we've got the networks to do it, and because we're interested in supporting them. It's not just about making an investment, it's because we love doing this. This is why we came together to do it. And so that's what we want to encourage for everybody.
Okay. I'm going to breeze past this. We set out to build a company that we could be proud of. And part of that is by being a participant in the community and making sure that whatever we're doing is either improving the world or not making it any worse. So our value statement was the first page that we put up on our website, and we encourage you to go and look at that. We're proud of our values. We make sure that the values match the companies that we're investing in, and that's an important part of what we do. We also know that companies with strong value statements tend to create better return than those that don't, but that's a longer discussion for another day. So how do you become an investor in Seismic? Our shares are for sale for $5.50 a piece. You can buy them on our website, invest.seismic.company. We have some incentives that are available only for accredited investors. At $50,000 and above, you get a discount on the share price to $5, and at $250,000 and above, you get some warrants to buy some additional shares at the current share price, $5.50. We're happy to talk to any and all of you. If you'd like to make a standard investment, just come on the website or contact your investment advisor about that. If you would like to participate in the private placement on the $5 shares or the $5 shares plus warrants, shoot us an email and we'll get you the paperwork for that. Eric, did you want to say anything else about that?
No, it's clear, but it's just, I love a little bit about the next page here, which is, it talks a little bit about, listen, we're different than other VCs that we mentioned. Again, we're equity based. We mentioned earlier that there's that, again, it's just straight equity. Hopefully we can get dividends and distributions back to you, but you can also trade your shares. And again, qualified small business stock that makes a big difference between us and the others that are out there in the space. And we control these companies. So when you're investing in us, and these companies are part of our portfolio, we work hand in hand, as Alice and Stephen mentioned, with these companies. And again, you'll know your investment is in really good hands in the slate of deals that we're looking at. And we love to have you guys as investors. And we're also
Eric,
happy. Go ahead.
If you don't mind, I just want to add, because I'm not sure if we made this clear, that there are no different classes of stock. Everybody, including the founders here, we all have the same shares that investors have.
Right. And as Stephen mentioned, again, seismic.company, we'd love to have you as an investor. You could call me on the telephone, email me, Stephen or Alice, and we're happy to answer any questions that you may have today or in the future. But again, it'd be great if you guys come on board here. We'd love to have you involved as an investor. We thank Tango and the group there for putting this together today. And we appreciate everybody joining in. And again, any questions, please feel free.
Here's some questions.
Okay, awesome.
What stage company is your sweet spot?
Well, I mentioned earlier, we look at, I guess, Series A, pre-Series A, company needs to have a product, needs to have some revenue or at least sales. That's really where we're looking at, but we're open to different parts of the transaction. Our investments, we're looking at anywhere between $500,000 to $10 million investment. And so that's really where we play.
Next question is anyone else doing this? I guess it depends what this is. Are there people doing venture capital investing? Yes. And there are many of them, and many of them are well known. Is there anybody who's making venture capital investing available to people who want to invest smaller amounts than $1 million? Not very many. Probably we're the only one that can, take small investments. We're set up for that. We set out to do that. Eric, Alice, and I have all made lots of money for rich people, and we're happy to keep doing it. But we did want to broaden the net to make it possible for anybody to invest with us. We like that democratization play. Is there a limit on how much I can invest? Yes. The limit is our current offering is for $49 million under Regulation A. Our private placement is for another $50 million. So if somebody wants to take the whole offering, less what we've sold so far, I think the upper limit is about somewhere around $90 million. But if somebody wants to bring that to us and invest with us, we'd be happy to have that discussion. Is it possible to invest monthly or quarterly? Alice?
Well, there's no reason why you can't. We are working with our platform to simplify that process, but absolutely.
Do investors actually receive shares in the companies or just in Seismic?
Again, it's just Seismic. It's a slate of companies. Again, when you're investing in Start Engine or Sweater, you're investing in that particular one-off company. There's some risks there. And so when you're investing with us, it's in our slate and you're investing in Seismic and then part of our investment in these companies.
How is this offering being received by the big wirehouses? Well, we haven't talked to any big wirehouses yet, so no ask and no offer yet. How did you come up with this idea? Oh, I like that question. So originally, Eric and I, as I said earlier, were seeing so many exciting little tiny deals who came to us and said, could you be our investor or could you raise the money for us? And since we're strong believers in diversification, we couldn't, tie up a lot of capital in one particular company. And since we have to make a living, we couldn't afford to raise money for these companies on the fees that you would make for raising, $1 million or $2 million, which is really what many of them need. What is your average investment? That kind of ties to the question that I just answered. But Eric, you want to take that one?
Well, I said we're looking to invest in between $500,000 and $10 million. The couple that I mentioned, they're in the $5 to $10 million range. So and also there's another question I started to invest. Yeah, that's it. Yeah. And as far as mega trends of specific industries, again, fintech, medtech, gaming, process improvement. Again, we're not really stuck on one particular industry. Some of them are really hot names, like whether it's NFT or cannabis, and they have questions over there, or cryptocurrency. We're not really involved in any of those quote unquote mega trends because I think there's a lot of volatility in those markets, and we necessarily want to play right now in some of those markets, even though we would look at that for sure.
All right, there are a handful more questions, which I don't think we have time to answer, but what we will do is we'll take them all, we'll answer them all in writing, we'll post them on the website when we post the recording of this video, and you have everybody's emails, everybody's phone numbers here on the screen. We're happy to talk to anybody about any more questions that you have. Love to bring you on board as investors. I think we all want to thank Tango, Bob and Nick and Michael for putting this together today. I'm really encouraged to see how many people have stayed on all the way through. We've got no drop-offs. So obviously we're incredibly lively and entertaining, and people are interested to hear what we have to say. Thank you everybody for joining in. Thank you, Bob, for the opening. And with that, I think we're going to say goodbye. Thanks, everyone.
Thanks,
Thanks,
everyone.
everyone.
Appreciate it.